How does housing construction impact you as a real estate investor? Well, the answer is a lot. Let's check out some data. These reports come from the National Association of Home Builders. Construction costs have increased to historic highs, at least the highest level since they've been tracking this data in 1998. So like almost 30 years ago. So construction costs now account for 64.4% of the average sale price of a home. And that's up almost 4% since 2022. That's a pretty quick increase and still an increase even though inflation has come down quite a bit. And the finished lot actually has decreased. So it's only 13.7% of the sales price, and that's down 4 points from 17.8% in 2022. In other words, more of the cost of building a home is in the construction cost than the actual land. And all this, you may be thinking, these home builders, they're just making so much money because all these new homes, they just cost so much. No, they're not. They're making 11%. That's a profit margin, and it's not even up 1 percentage point since 2022. Now that was cost, but let's look at actual housing construction starts and completions. Overall housing construction ended the year last year on a pretty positive note. So 15.8% increase in December, which was the highest that we've seen since February. Now that's overall housing, including single family and multifamily. If you look at overall housing construction from a year-over-year basis, it was actually down 3.9% for the year when you compare it to 2023. Now single family starts were up by 6.5% year over year. That's good. And completions were up by 2.2%. And single family had a pretty big uptick at the end of the year. Multifamily is a totally different story though. Multifamily starts are down by 25% year over year, but completions were up by 35%. Really what that means is they had so many multifamily projects between 2021 to 2023 and onwards that there was so much inventory coming on that they slowed down new starts. Multifamily starts have kind of fallen off a cliff lately. There's still a lot of projects that are ongoing that are still being completed. So that's what we saw in 2024 with multifamily. Now it's worth noting that all these numbers with construction are well below numbers that we saw 20 years ago. Deeper into multifamily, you can see how starts trailed completions by huge margins. 254,100 more units were completed than started in 2024. That's huge. Now, when you look at supply, you can see how supply over the last couple of years, it's been very elevated. But with fewer new units coming online and being projected or started today and going forward, as that inventory gets absorbed, then at the end of 2025 and into 2026, existing units that are run well, they should enjoy stronger rent growth. What does all this mean to you as a real estate investor? It really depends on your strategy, and it's important to note that real estate's local, so your local market may be different than what some of these national trends show. But with construction costs at record highs and increasing, it's just hard for developers to keep up with demand and still remain profitable. If you have a property today and it's performing well and you have good fixed debt or long-term debt on it, there are some tailwinds in your favor in regards to fewer new inventories coming online as far as compared to what the demand could absorb. Now, in the case of multifamily, where starts have just fallen off a cliff, then if you have a property where there's not a lot of completions coming online over the next, say, 12 months or so, you should see some stronger rent growth going in towards the end of this year, but definitely into 2026.